In this video, I'm going to show you how you can invest into REITs on Trading 212, otherwise known as real estate investment trusts. Now, as you can see, you can either invest into these via your Trading 212 Invest account or your Trading 212 Stocks ISA. I'm going to stay in the Stocks ISA for now. There might be small differences between what you can invest in the Invest account versus the Stocks ISA. Now, of course, before investing in anything with Trading 212, the first thing you're going to want to do is to click this magnifying glass down here. Now, once you are in this menu, you can see that, there are a lot of things immediately apparent. You have this tab here, the most traded, you have big tech, top movers, and then you have ETFs. REITs are not exactly like ETFs, but they can function quite similarly because there could be more than one underlying company that this fund basically invests into. Now, if we keep scrolling, you can see that there will be a section called REIT, and we want to go into that. Now, as you can see, Trading 212 has this category by themselves. As you can see, REIT stands for Real Estate Investment Trusts, and this selection here is sorted by activity from most popular. Now, like I said before in my videos, just because something is popular does not mean it is a good investment. If you want to know what a good investment is, of course, you're going to have to take the risk into finding out, but also you can do your own independent research, which I always recommend because at the end of the day, it's your money and you should be most informed about your own decisions. Now, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100 in your Trading 212 Invest account or your Stocks ISA, all you have to do is to click the link in the description box down below. Alternatively, if you've already signed up to Trading 212 in the past 10 days and haven't received a free share, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code, and in this menu enter my code JUBAIR and you should receive a free fractional share. But anyway, we're back to this menu here, REIT. As you can see, there are many to choose from and I am not giving any financial advice here. I'm just going to go through some of them and kind of explain a bit more about how you can invest into these. Now, you should also notice that a lot of these are in dollars, which means if you are investing into American funds, then there will be a foreign exchange fee coming from the pound or euro if you're in Europe. Just bear that in mind. Currently, that is 0.15%, and a lot of the times you would want to actually avoid this. So by far, the most common is Realty income. As we can see, the ticker code for Realty income is very funny. It is only one character, which is very unlike most ticker codes. You can see it's just an O, and I'm not actually sure why it's that, but it is what it is. Like I said, this is in dollars, so it's traded on probably the New York Stock Exchange. You can find out more about the market status here. You can see that this is actually on the New York Stock Exchange, so the times the American markets are open are very different from what the UK and European markets are open, so do bear that in mind. Anyway, you can see here, we can see its performance. So you can see its 1 week performance down by 0.26%. Over the last 3 months, accurate to today, down by 5.69%. And over the max period, Trading 212 recorded anyway, since around June of 2018, it is up by 17.28%, which is, in my opinion, not the best considering something like the S&P 500 over that time period returned over 100%. But anyway, I'm not here to discuss the performance of these REITs. So the thing that differentiates REITs or REITs from other funds is that by law, they do have to distribute a portion of their profits back to their shareholders. And I believe Realty income pays out dividends every single month, which is actually kind of bonkers. You can see that the ex-dividend date here was on the 3rd. So if you had held these shares on the market open of 3rd of February 2025, you would be entitled to around 26 cents per share. Now, bear in mind, because we are UK investors, most of us anyway, there will be some sort of withholding tax on these dividends. So you're not going to get that complete amount. So you're not going to get 26 cents per share. Although on top of that, currency fluctuations between the dollar and the pound would mean that the amount you get is going to be not exactly this. But anyway, we can see with Realty income, there is a very high dividend yield of 5.77%. Of course, dividend yield is very much related to the stock price. You can see that the market cap is quite high at 47.5 billion. Revenue is over 4 billion. You can also see their financials. So you can see Realty income, for example, that their net income income has been going up and their revenue has been going up. I always encourage independent research, and I will actually never tell anyone what to invest into. I can only just show you the details. But anyway, as you can see, realty income is an option. We have the next one, the AGNC investment. What I do notice is that even though these companies do pay a large dividend, as you can see, this one's huge at 14.21%. Their performance over the past, few years has been pretty terrible. Like this one, since around October 2019, it is down by 38%. So you can see high dividend yield means nothing if the stock price keeps going down. You can see that the ex-dividend date was on the 31st of January. And again, I'm not sure about the dividend frequency here. I wish Trading 212 were to add it here. I have realized that Trading 212 has this menu over here called More Stats. So let's actually go into that. So here you can see key stats, for example, market cap, enterprise value, average volume, beta, earnings per share, dividend yield, valuation. And actually, if you go into valuation, you can see quite detailed history about their valuations and stuff like that. Personally, I am not into looking at all these data points, but if it's something you fancy, you can go into it. So that is why if you want to invest into REITs, typically speaking, you wouldn't go all in on REITs. If you want to do that, by all means, you can see that their value seems to be quite cyclical. Sometimes there are good periods when it comes to REITs, and then sometimes there are bad periods. Over the past year, Stag Industrial, for example, is down by 6%. Now, you may be wondering what REITs actually invest into. So REITs could have different themes. They can be commercial properties, they could also be residential properties, but typically speaking, REITs can invest into a range of different real estate property types. For example, apartment buildings, which are residential, offices, retail such as shopping centers, medical facilities, data centers, anything that involves real estate, you can bet that there will be some REIT that will cover that. Okay, now if you are a UK investor, you probably would not want to, go too much into American REITs. So there are actually options for people based in the UK. For example, Segro is a massive company here. You can see over the past year, Segro is down by 15.14%. However, if we switch that over to the past month, we are up by 5.82% here. Now, as you can see, Segro has a dividend yield of around 4%. And from their income statement, it looks like 2021 was their peak. And also looking at here, it looks like around 2022 was the peak for their shareholders here. Now, of course, there are some benefits of investing into REITs, even though you can see their value is quite cyclical, or there is actually no way of knowing where this fund will go. So the benefits are that these kind of funds, REITs, tries to keep up their dividend yield. So it is a place where you can put some money in and expect some form of dividend. However, like I said, if the share price is going down, dividend yield doesn't really mean much. If the companies are not generating much profit, then there is not much to be giving out. If you've ever driven down a UK motorway, you would have seen the big yellow group here. You can see since around June of 2018, they are up by 153%, really good here. Over the past year, however, down by 12.45%. And remember, these companies can be quite cyclical. There might be something in the real estate market that actually causes big dips like this. For example, lower supply, rules and regulations and taxes and stuff can really affect these companies. Over the past month, up by 5.92%. Now you can see they do have a really good dividend yield of 4.76%, and you can look at their financials for yourself if you are interested more in these companies. But of course, if you did want to invest in it, all you really have to do is to press buy, and then of course select the amount of shares you want, or if you know the exact value, you can actually do that. For example, £1, and then of course review order and then go into that. But of course right now I'm not interested in investing in REITs, as I don't believe I want them as part of my portfolio. For me, I would rather be chasing growth instead of constant stream of revenue. It is not time for me to retire yet, and even if I were to retire, I am not very sure that I would want to put most of my money into REITs. So make sure to check out some of my other videos, and I'll see you in the next video.